Hello, everybody. It's a great pleasure to be here today, and it's our second day, but we're going to discuss quite important topic of VC investing into crypto startups and evaluation of crypto startups. And just in the first half year in 2024, we saw approximately funding of the crypto startups of $5.19 billion. This number is still below the peak levels of 2022. But it's rising because we see some victories of crypto companies in legal battles. We see as well much bigger legitimization of our industry with the approval of Bitcoin and Ethereum spot ETFs in the US. And as well, we see the pump of the market. So, of course, the interest to our industry is coming back. And among those startups, the most funding got trading, Web3, and infrastructure startups, especially with the deals like, for example, of Modat, $225 million Series A round, Barachain of $100 million Series B round, and as well, the US crypto startup ecosystem is still leading because despite some challenges, in the US with the crypto regulations. So let's first start with the introduction of our panelists and with their funds and in what deals and what type of companies they invest into. So let's start with Carla.
So hi, everyone. I'm Carla. I'm from LeadBlock Bitpanda Ventures. LeadBlock is actually a European venture capital fund who's been around for the past 5-6 years, investing in the centralized part of the ecosystem. We invested in Bitpanda, leading European crypto platform. We invested in Talos, trading infrastructure, pouring a lot of the crypto products for US institutions. And more recently, we've actually partnered with Bitpanda to launch a new venture capital fund. It's a 50 million fund. This one will be focusing more on the decentralized part of the ecosystem. We invested so far in 4 companies, including Morpho Labs, DeFi lending, proof of finance, liquid staking. Yes, that's it.
Thank you, Ivan.
Greetings, everyone. My name is Ivan Maltsev, and I'm a general partner at 3X Capital. We invested in more than 50 early-stage startups, specifically their tokens, also participated in different node sales. We invested in Layer 0, Xai, Tevaera, and many other notable startups, mainly focused on infrastructure, DeFi, real-world assets. I'm super excited to be here, and yeah, looking forward to the panel.
Anna Maria.
Hi, everyone. My name is Anna Maria, and I am Chief of Staff at Triton Liquid Fund. We are a new digital asset hedge fund based in the UAE. And while we invest in liquid tokens, we invest with a VC fundamentals perspective and do the write-ups and due diligence into teams and investors in the same way as other VC funds and collaborate with VCs as well as liquid GPs. And we currently have 45 million AUM after launching this year and have around 30 investments in our portfolio.
Thank you, and let me introduce briefly myself. I'm CEO of Coinstelegram. We have a group of companies in the news media space. We have a news website as well, PR marketing agency. So we support both startups and already established companies, and we help them with the promotion. We get them featured in top media like Forbes, Entrepreneur, CoinDesk. As well, we work with a lot of influencers, QLs. And we produced a documentary about Web3. We have there many top leaders of the industry, like Vitalik Buterin, creator Ethereum, Paulo Arduino, CEO Tether, Yad CEO, chairman Animoca Brands, and as well many other founders and VCs. And we'll be having a premiere soon in Dubai on 21st October. So if you are in Dubai during those days, you're welcome to join our event. So let's start with our discussion. And my first question, what are the key metrics you are looking at while evaluating crypto startups? And let's start with Carla.
The key metrics?
Yeah, what key metrics you are looking at when you assess whether to invest into this or that company?
So it's a very vague question. Maybe the first thing we'll look at is the team. I think, the team has to be able to demonstrate a sensible understanding of the industries they're building in, whether it's gaming, social, financial services, and so on. I would say even more than an understanding, you need to be able to demonstrate that you have a sensible network, key relationship that would enable you to maybe unlock key partnerships, make key contracts that would help your business flourish. I think that would be key for us. Because in the early day, everything is down to the founding team to actually convince clients, users, VCs, and the potential upside that they can bring. I can go on, but if you want to say something else.
Sure, definitely agree regarding the team. And I think that the main trait that we are looking for in the team is adaptability. So we try to challenge them with new ideas, brainstorming together and working together on the product. And if we see that there is a resistance between us and the founder is not ready to evolve and to brainstorm together, probably we will not invest in this scenario. Also, the market potential is crucial to understand who are your customers, how big is the market, what is the potential revenue projections for the next at least 5 years.
Yeah, at Triton Liquid, we have a proprietary data platform where we gather data from 18 different sources, and we go super niche. We look at each vertical, DPIN, DeFi, everything across the digital asset spectrum, and we look at which metrics are most important per vertical. But we can get very fancy about it. At the end of the day, most important is TAM. Are you addressing a market, and is that growing? And are you able to provide solutions that can scale with that TAM? That's the bread and butter at the end of the day.
Thank you. And Carla and Ivan mentioned that team is on the first place when you consider whether to invest into this or that startup. So, like, what skills and what professional background do teams need to have? Whether do you consider like first-time founders, or do you prefer as well with some other backgrounds the teams? And as well in the crypto space, we see a lot of anonymous teams or like masked teams. So, how is the importance? The transparency of the team for you?
I can go first, but so maybe as I mentioned, for us, what's key is to be able to demonstrate sensible, experience or at least understanding in the industry you're building in. I think a skill maybe that's very important when you're building a company is resilience. Building a company is like a roller coaster. We know the crypto market is moving through cycles up and down, so definitely during the downs, you want to still keep your motivation, keep building, so you'll be able to take advantage of the next bull and reach new milestones. In terms of the team, I would say, definitely we are EU-regulated VC fund, so we have some legal requirements in terms of when we decide to invest in a company, and definitely part of it is going through the team and doing a bit of KYC checks. But I think more than the legal requirements, investment is about building a trusted relationship between investors and the funding team. So if we cannot manage to crack this so that the funding team can trust us, that they can divulge their identity to us at least, not to the words, I think, for us that would be a sign that something's not right.
Thank you. Ivan, what's your comment?
Yeah, I just thought about the quote from Warren Buffett, who once said that you are searching 3 main traits in founders, and first one is about hard work and energy, second is about intellect, and third is about relationships or trust. So if the third is not in place, probably first 2 doesn't matter. So definitely, I suggest to start with going through some different experiences together with founders. For instance, previous year we were doing hiking together. This year we did 2 yacht trips with founders and investors that helped us to identify the traits and experience different new things and of course become better versions of ourselves. So it's a mixture of going through different experiences together and identifying the founders with whom you can work together and whom you can trust.
What I would add in addition is one, how long has the team known each other and have they worked together in previous projects? 2 is, have they built a similar type of product within that vertical previously, and how much vertical specific domain expertise they have? And 3 is, do they have an understanding of what it takes to scale? Have they done that previously, or have they spoken with other projects and understand the ins and outs of how that works? And can they answer reasonably to different types of scenarios and questions after a discussion?
Yeah, that's important. And as well, in the crypto space, it's quite differentiates from the traditional Web2 startups because investors often invest not just into the equity of the company, but into the tokens. So it can be a combination of equity and soft for the tokens. So what role does tokenomics play in your evaluation process, and how is it important, the token distribution and utility of the tokens in your assessment?
I think the first question a founder should ask itself is that whether a token is actually needed for their project or not. I think we've seen a bit too much of a hype around it. So if it is the case that the token is actually bringing utility to your project, then you still should be very careful when planning for the different parameters. We've seen many projects, getting funded right before token launch because I know they had published a token allocation that did not please their users. And once the token is launched, it's very difficult to revive it, and it is very likely that you'll be more focused on finding ways to revive your token rather than done building your actual product. So I think definitely building a token is not an easy task. So that's why you should try to partner with people that can help you do so. At LeadBlock, we try to spend time on the tokenomics, on the token listing strategy, helping with relationship with market makers, exchanges. But it's definitely not an easy process.
Thank you, Ivan.
Yeah, I truly agree with your comments regarding the necessity of the token. I also have a joke. During one of the pitch session, we asked the founder what will be the token and what will be the utility. He said, we plan to have a token discount. So, of course, in this scenario, there is no need of tokens. So there will be, for sure, the strong pressure on the token price. So there should be some value for it that will create a significant demand. And we truly try to help founders based on different models to create these projections for the demand that can lead for a sustainable token price. But of course, due to market frustration, it's completely impossible to project everything. So I think that the main ones will be to put together the model that will work with different participants of this market, like developers, users, investors, founders, and try to project the demand and project the selling pressure, because I am sure 100% that people will sell.
I'll just iterate further on top of the utility, which we strongly believe in, which is a clear plan and schedule for the unlocks, the vesting, and really understanding how you're going to allocate that. But just saying that you're going to allocate 60% to airdrops next year is not helpful, but a clear plan with transparency is key.
Thank you. And as well, in the case when project has a token and it's a B2C project, so they basically need the community which would use the project and as well which will trade those tokens. So how do you evaluate the community involvement into the project and the attraction, and how do you assess how active the community is? Because nowadays a lot of projects just like easily can put fake followers on the Twitter and Telegram, Discord channels. So what metrics do you use to check whether that community is real or not, and how much it is involved?
I think the good thing about blockchain is that everything is on chain, so it's easy to check. You don't have to wait for the quarterly reports to come in to get a sense about the numbers. So you have plenty of tools that help you get through on-chain data analytics, token terminal, for example, but you can look at different metrics, the amount of money deposited on the protocol, or the total value locked, a number of wallets that interacted with that application, protocol, amount of volume that went through. So yeah, there's different metrics you can actually look at to get a good sense of, either a bit of attraction in that application or protocol. The other point as well, I would say, is about engagement in socials. So, definitely looking into whether community is engaged, key opinion leaders are engaged on Twitter, X, or Facaster is also a good indicator.
Will you have any requirements for the community if you are looking for a pre-seed or seed project?
I guess it depends. For us, we're mostly looking post-seed, pre-Series A. So, definitely we don't have specific numbers, but being able to demonstrate of a sensible traction and having a bit of numbers is part of the game.
Thank you. Ivan?
Yeah, I like the interview that we did with my partner Dima and one of the founders, Gavin from Tevayera, who mentioned that proactive community equals strong product. So community is a major part of any project, even B2B projects. They should realize that receiving feedback from users, from partners is crucial. Of course, we use different tools like Twitter Audit, Twitter Score. There are many of them. And we go through different qualitative and quantitative metrics, including followers, engagement rate, and many other. Even the sentiment in the comments on the post is truly important. So we can see if people are really excited about this project. And obviously, every analyst spends a lot of time going through Discord channels, Twitter channels, just to understand if the community is alive. Because it's really easy to buy fake accounts or cheap accounts in order to have this followers amount. So probably I will be focusing on engagement and on bringing more ambassadors to the community that can lead to the growth.
Yeah, just echoing that while we follow certain metrics on chain, specifically from a community angle, it's more anecdotal about you going to the Discord and Telegram channels, and do you see a couple of people interacting, or is it a masses of people interacting, and is it more of a marketing channel where the team posts signals, or is it users interacting with each other and giving also feedback to the team?
Thank you. And as well, because we are still not on those levels of funding as it was back in 2021 and 2022, when it was some kind of super cycle, and a lot of macroeconomic factors influencing that. So how do macroeconomic factors influence your investment strategy? And we see as well inflationary pressure and changing regulatory landscape. So how do these factors influence?
Well, yeah, we definitely take into account macroeconomic factors when setting our investment strategy. But it is, as a venture capital fund, we have a long-term strategy, so very likely that by our first investment to our last exit, we'll go through several cycles. That being said, definitely digital assets, VCs, are more seen as or labeled as risky assets. And so in terms of asset allocation, they're very related to interest rates or inflationary pressure. That being said, I think especially in a changing regulatory environment, for us, what's key that we'll be looking for projects that can try to anticipate those changes and that will lean towards adaptability and maybe more compliance. But at the end of the day, to be honest, it's about looking at those macroeconomic events and trying to assess risk and opportunities into our strategy.
Ivan?
Yeah, I will just add that we try to adjust our strategies based on different factors that are external from the market. Obviously, during this type of periods, it's more reasonable to provide the liquidity to different protocols and ecosystems where you can basically earn rewards and have some returns during this turbulence. And obviously, when the market is on hype, like we saw in 2021, all valuations were overvaluated. So during this period of time, it's probably great time to exit, but not to buy more chips in the companies and tokens. So I can say that there is a significant influence by macro factors on our investment strategies.
Yeah, at Triton Liquid, we pay less attention to inflation, but follow the interest rates. And so the 50 bips interest rate cut we see as a favorable signal for the market. And then we also track the U.S. elections as partially because our team is based in the U.S. and also because we think it sends a signal for how one of the biggest economies in the world is thinking about crypto at the market and how the SEC is approving crypto ETFs, for example.
Thank you. And the last question, maybe you can answer briefly. What advice do you have for the founders which are currently raising funds?
I think maybe, so yeah, raising fund is a long process, I would say. So be sure to plan for that carefully. Make sure maybe to reach out to some connections, have some warm introduction, try and anticipate for the next cycles, raise enough money so that you'll be able to actually take advantage of the next goal and reach key milestone.
There are so many advices we can provide. It's always hard to execute, but the personal brand is something that will help you with your first startup or fifth startup. It doesn't matter. So I will definitely suggest to work on it and also focus on relationships with your investors, with ambassadors. It can help you a lot in the growth in your first or second round. It doesn't matter, but relationships matters. Of course, with your reputation, with your skills, you will be able to succeed. It's just a matter of time and how you will be able to adopt and adjust your ideas.
So I would say be genuine, be transparent, have good documentation, and also rehearse your pitch a lot of times. There's a lot of key elements that people forget when they're doing their elevator pitch or their 3-minute pitch. You need to cover all the bases of team, business model, TAM, everything like that. And I would study hundreds of others' pitches to understand how to do that really well. And also be able to answer any question that an investor asks. That includes competitors, that includes market, that includes prediction. So you need to be studying that constantly about your business all the time to prepare yourself for conversations.
Thank you for such great advices to our VC panelists, and thank you for interesting discussion.
Thank you so much.
Thank you.
Thank you.
Thank you.